Hello and welcome to this edition of the Market Share, your first source for market information. I'm Paul Gifford, Chief Investment Officer, and joining me today is Jason Cooper, one of our senior portfolio managers. Jason, 2 weeks ago, I wrote about kind of the crazy 91 days called the second quarter and how that continued into the first few days of July with the passage of the big, beautiful bill. Can you help give a little more in-depth look at that second quarter and maybe the first half of the year for our viewers?
Yeah, absolutely. The second quarter was a bit of a roller coaster ride in terms of what we experienced in the overall market. The first chart I thought did a really good job to show the beginning of the second quarter to where we ended the quarter, and in terms of just where it started, the dip, and then the increase. But really, it came down to a few things. If you think about what we have just experienced in terms of we had a new president come in. We had Liberation Day at the beginning of the second quarter and the conversation around tariffs. We had the big, beautiful bill continue to come up, and we saw that passed later in the quarter. We saw unrest in the Middle East with Iran and the bombings that occurred. We had two all-time highs, one in the first quarter and the one in the second quarter, along with being down close to 20% in the market at one particular point. So it's been very much a roller coaster ride, but the chart does, I think, a really good job to just show, as that news was coming out from the current administration, what we experienced in terms of the day to day. And then as we got a little more certainty with things, it really started to see some improvement and just some constructive growth in the market. In terms of sectors, it was a tale of two sides, I guess, when it comes to what did well and what didn't. The first quarter, we were already experiencing somewhat of a decline in the market, and we saw those names that had high valuation, high levels in terms of price, come off, and then they just continued to be that way as we went into the second quarter. Well, again, things changed very quickly in those next 90 days. Where we saw things absolutely flip the other direction. And that's what this chart does, is it shows we went from technology, consumer services, consumer cyclicals not doing well in the first quarter and being some of the big losers to then becoming the big winners in the second quarter and in a big way. And we've seen that really recover.
Truly a tale of two quarters is an easy way to do it. We introed, and you mentioned it briefly, the big, beautiful bill was passed. President Trump signed it on July 4th. How does that impact, or how should investors think about the second half of the year after that announcement?
I think the biggest thing for us from an investment standpoint, and maybe there's another video soon to come in terms of the details and getting into the weeds of the bill, but what it does is it gives some certainty to the market. And we've seen that happen with the amount of volatility go down, not only in fixed income, but also in the equity markets, which is great. I think the market really appreciates the fact that there's certainty and the ability to make better decisions when it comes to investing, maybe a small business versus an individual putting money to work. But we also know that things aren't exactly peachy keen yet either, as we saw inflation numbers just come out. They're still very pesky, but they're better and they're still improving. So we feel that there's the opportunity for the Fed to do something later this year, which also should bode well for the market, because if the Fed is starting to ease things off a little bit, that could also free up some investment and some capital. The last chart I like is because there is opportunity out there in terms of what we might see going forward for the next 6 months. And this really does a great job to say, okay, we're hitting all-time highs again. What does that mean for investors? And really, it's all about return, right? So if you're looking at this chart and you're thinking about, is it too late? Did I miss the boat? It's not necessarily the case, because we've seen on a 1 and 3 and 5 year basis that if you do invest and you continue to invest at all-time highs, the opportunities are a little bit better in terms of what you might experience going forward in those different periods of time. Whereas if it was just unconditional and you're just putting money to work, the returns are a little less. So that's also something to say, hey, you really haven't missed the boat yet. there is still opportunity, and certainly what might be today's highs will be tomorrow's lows.
Love the quote. Today's highs are likely the future's lows. So, Jason, obviously, thank you very much. I enjoyed your comments on the market and what we might expect in the second half. If you enjoyed today's video, I encourage you to share that with your friends or family. If you do not currently receive the market share, you can do so by scanning and subscribing with the QR code at the end of the video, or sending us an email at wealthadvisory@firstsource.com. And as always, thank you for the opportunity to serve you and your family, and have a great day.